This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XPX index is at $36,290. Bitcoin is sliding down about 2.6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Let's take a look at some of our top stories moving markets right now. Futures traders betting on upside for Bitcoin and Ether lost a cumulative $204 million to liquidations as prices dipped over the past 24 hours, CoinGlass data show. Liquidations occur when an exchange closes a trader's leveraged position as a safety mechanism due to a partial or total loss of the trader's initial margin. Meanwhile, crypto custody firm Fireblocks raising $550 million and an $8 billion valuation. Crypto tax software developer CoinTracker also raising $100 million at a now $1.3 billion valuation as tax season heats up. And crypto exchange Epiphany going public through a $530 million SPAC merger. The deal is expected to close in the third quarter, and Epiphany will then list on the NASDAQ. Finally, hashtag BINANCESTOPSCAMMING is trending on Twitter. Several Nigerians are claiming their funds are being frozen unjustly on Binance, but in turn, others are accusing them of being scammers themselves, and that's why their accounts are being frozen. Blockchain sleuthing firm Whitestream has called Nigeria the focal point for Africa's crypto scams.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, this chart from Fundstrat showing Bitcoin's correlation with tech stocks, namely the NASDAQ. It's Fundstrat contrasting this with the 2018 sell-off, where BTC was not correlated with tech stocks at all, suggesting that the bottom is not necessarily where the marginal crypto-native seller capitulates, but where the marginal legacy macro seller becomes exhausted. This difference is a major reason why Fundstrat believes BTC is much less likely to experience a prolonged crypto winter, because price decreases are not coming from crypto natives. If it were, they would be much more concerned. You can see there in that chart that tech stocks and BTC are correlating close to that one figure, meaning they're very close together. Nevertheless, Bitcoin's near-term prospects looking bleak, according to CoinDesk's Omkar Gaboli, after the U.S. Federal Reserve set the stage for a more aggressive withdrawal of liquidity, weakening market confidence in the so-called Fed put, a notion that the central bank will come to the rescue if assets tumble. On Wednesday, the Fed pointed to the U.S. economy's underlying strength and inflation stickiness and reaffirmed plans to end its bond purchase program in March. It also hinted at a potential interest rate increase in the same month. All right, joining us now to discuss BT price and more is Don Kaufman, co-founder of trading education firm TheoTrade. Hello there, Don. So taking a look at Bitcoin price, what do you see in the horizon short term versus long term?
Yeah. So one of the first things I'll bring up is the correlation coefficient that you just showed a moment ago. It's something I'm looking at continuously. Whether you want to look at the NASDAQ, whether you want to look at the S&Ps, the correlation is extraordinarily high. And that does not exactly bode very well for Bitcoin specifically in the very near term. There's a tremendous, right now, amount of risk on the table. We're going to see some really wild volatility as well in just the very next few days.
Well, speaking of that chart, the chart of the day, so you're seeing that it's very correlated with tech stocks, with the NASDAQ. So I wonder, where would you put this floor and the ceiling on Bitcoin then?
All right. So one of the things that I actually use in Bitcoin quite considerably is kind of an old school tactic that we used many years ago, all the way back at the Chicago Board Options Exchange. And that happens to be that I'm applying really price mechanism for movement using some Bitcoin options, specifically the Bitcoin futures. So I look at the Bitcoin options on the futures, and what they're showing is for about the next 30 days, there's about a $6,600 movement ultimately being priced in, either higher or lower. Now that's what we term kind of a one standard deviation move. I don't want to completely geek out on everybody. Don't get excited about the fact that the expectation of movement is only $6,000 higher or lower, for instance, over the next 30 days. The overall movement that would be priced in there is what we term a probability of touching. And it references almost a $13,000 move, either higher or lower. So again, to kind of put this in context, if you looked at Bitcoin right now being a $36,000 product, the expected range based on option marketplace right now is that ultimately Bitcoin is going to trade upwards of $49,000 or all the way down, for instance, to $23,000. And unfortunately, at this point, again, the market actually projects there's considerable downside pressure and still considerable downside risk.
So what are some of the catalysts do you think that could either push the markets a leg lower or market higher? What kind of headwinds and tailwinds do you see for Bitcoin?
Number one headwind right now that we're looking at in the overall marketplace, whether any asset class, of course, you're going to point out interest rates. So I think everybody's aware of exactly what the Fed said. I mean, listen, the Fed came out probably more hawkish than I would have anticipated, but they said it in the most dovish terms possible. Nevertheless, if you look at like the 10-year interest rate, it's sitting at about 1.8%. If that starts to crack any further to the upside, it is really going to turn into kind of fear and loathing inside of the crypto markets as a whole. The other aspect that's going on specifically today that I, again, don't think necessarily bodes very well for Bitcoin specifically, there is a huge breakout right now in the US dollar to the upside. And the dollar to me has become kind of like the new volatility index. People talked about, years ago what the VIX is. It's for the S&P 500, it's the volatility index. When it comes to the crypto markets, not enough people are paying attention, though, ultimately to the US dollar, which is, in effect, it's like duck and cover. Right. So a lot of people from crypto are going to move to some of the stable coins, but the dollar breaking out to the upside, I don't think, again, bodes well for many major asset classes right now.
Mm-hmm. And taking a look at, again, the correlations with tech stocks, do you think sellers are mainly macro legacy traders and that the crypto natives are keeping their coins close to the vest? Who are the sellers out there?
This actually, it's a great question. So I am the quantitative like elk. I'm a little bit more of an old school trader. And I'm going to tell you right now, when you see asset prices getting hit across the board, it doesn't matter what the product happens to be, they're going to hit them all. And if you look at Bitcoin specifically, the more tied in it becomes to other asset classes. And when I mention other asset classes, I'm talking about the NASDAQ and NASDAQ related stocks. I'm talking about the S&P 500. I'm talking about, volatility in the S&P 500. Unequivocally, it is tied in now. With the, of course, the listing of Bitcoin futures. Now we have a Bitcoin futures ETF. The more tied in we are to those platforms, the more ultimately the crypto is going to move like any other asset class.
Interesting. So my sense from what you've been saying is that we're in for a lot of choppy waters, perhaps a leg lower. So I wonder, are you taking this as an opportunity to buy? What's your strategy?
So I'm much more of a volatility player, and that is I'll happen to be long. I can actually be short. I do actually trade some of the alternative products out there, like a futures contract, for instance, against Bitcoin directly. So the more volatility there is, typically the better it is specifically for me. If you were just on the long side of crypto or Bitcoin specifically, listen, right now you got to worry about getting washed out of this marketplace, right? So we're going to see some really intense short-term volatility. I mean, the bottom line is, if you compare, some of the crypto markets and specifically Bitcoin to the S&Ps have not been washed out. And what I mean by washed out is no one's throwing the towel in. We've had a couple of days like earlier this week where we really kind of felt the fear, but that's one thing that we have not gotten there yet. Not in the crypto markets, not in the S&P. When I say feel the fear, you got to stare at that screen right now and you got to look at it and think to yourself, oh, the world is coming to an end. We got to flush out some of the weak hands. If you are in this, you have to look at what I was talking about a moment ago. It's kind of that standard deviation of risk. You got to ask yourself at this point, can you withstand a $13,000 move higher or lower? Okay, let's not even assign what we think price action is necessarily going to do, but can you withstand a $13,000 move inside of the next 30 days? And if the answer is no, you have ultimately what your position should be at that point in time. I mean, listen, these option markets are very definitive. There's, hundreds of millions of dollars at risk ultimately in that marketplace. It's one of the greatest ways, though, to be able to discern that risk.
Certainly a lot of people out there are putting that to the test with the hundreds of millions of liquidations out there. Don, thanks for riding the volatility and dropping by. That was TheoTrade co-founder Don Kaufman. All right, coming up, how the U.S. infrastructure bill signed into law last year threatens your privacy, what you should know about how the U.S. government is monitoring your crypto transactions. That's next.
You can NFT anything that is inspiring to you.
This space has changed my life.
And then I started looking under the hood. I like the potential and the freedom that the NFT world gives you.
I want to be with the forerunners that are pushing the change to how not just musicians, but how creatives are going to sustain themselves.
In the non-fungible joking show, if this ends up being huge, it would change the world.
Welcome back. U.S. lawmakers challenging the definition of a broker in U.S. President Joe Biden's infrastructure bill that was signed into law in November. Representatives propose following a definition which avoids placing unworkable customer reporting obligations on parties who do not, in fact, have customers, such as crypto miners and stakers. But also tucked away in that bill is another hidden crypto provision that amends part of the tax code in a way that my next guest believes will greatly expand financial surveillance, criminalize certain cryptocurrency transactions, and violate the Fourth Amendment of the U.S. Constitution. Joining us now to discuss is Marta Belcher, a cryptocurrency and civil liberties attorney. She's written an article on CoinDesk.com as part of CoinDesk's Privacy Week series there. Welcome, Marta. Thanks for coming on. So a lot of times these lengthy bills are approved and signed with a few headline-grabbing line items, but hidden in the fine print are provisions that have gotten little attention and review. So tell us what you found.
Yeah, so there was a lot of talk, during the period of the infrastructure bill about the broker provision. And there was very little talk about another provision which would alter Section 6050I of the tax code. And that provision, I think, is actually in many ways much more problematic than the broker provision from a financial surveillance perspective.
All right. So, and I understand it has a $10,000 reporting requirement, which is required of banks. So this is extending this rule to crypto. And what's the concern in that?
Yeah, so the existing Section 6050I of the tax code basically requires that businesses that receive more than $10,000 in cash have to collect the identity details of the person who's paying in cash and then report that transaction to the government. And in some cases, failure to comply can actually be a felony, punishable by 5 years in prison. And so what happened was the infrastructure bill, now the infrastructure law, expanded 6050I to include anyone who, in the course of doing business, receives over $10,000 in digital assets. Right. And so, as of now, the government collects information from cryptocurrency exchanges and the other institutions that are the on-ramps and the off-ramps where people are buying and selling and exchanging cryptocurrency. But, this new law on its face could impose these reporting requirements on many other participants in the cryptocurrency ecosystem. So you're talking about anyone who, in the course of conducting business, receives more than $10,000 in digital assets, which really could be developers to traders to miners to end users. And so these participants could be required to collect really sensitive identity details of their counterparties and then securely handle that sensitive information and then turn it to the government by default without a warrant or potentially face criminal penalties.
And you say this is a constitutional issue. It violates the Fourth Amendment. Tell me a bit about your thoughts on this.
Yeah, so basically, the Fourth Amendment of the United States Constitution requires that the law enforcement get a warrant supported by probable cause before they conduct a search or a seizure. And yet, under the Bank Secrecy Act and sort of existing financial regulations, the government really engages in mass surveillance of bank customers without a warrant. And so, why is that? How is it that they're able to do that? Well, the answer is something called the third party doctrine. And so that's this idea that if you give your financial data to a third party, you really lose your reasonable expectation of privacy in that data. And that traces back to U.S. v. Miller, which was the Supreme Court decision in the 1970s about the constitutionality of the Bank Secrecy Act. And I believe that the Supreme Court today would actually come to a very different decision and would find that this kind of surveillance that we sort of accept as normal in the financial system is actually unconstitutional and violates the Fourth Amendment.
And do you think that there will actually be a constitutional challenge to this provision then?
I hope so. I hope there will be. And if not this provision, I think there are so many other ways in which the Bank Secrecy Act is being applied today, where it's so much broader than it was applied in the 1970s, right? So when the Bank Secrecy Act was being challenged in the 1970s on constitutional grounds, the way that was being applied was very narrow compared to today. The financial surveillance today is much, much broader. And I think more importantly, really what has happened since the 1970s is the amount of information you can glean about someone based on their financial transactions is huge compared to what it was in the 1970s. And the Supreme Court has really been recognizing in the over the last decade that in the digital world, the third-party doctrine really shouldn't apply. And they've been chipping away at the third-party doctrine in a series of really strong pro-privacy decisions. And I think that if they looked at the surveillance in the Bank Secrecy Act today, they would come to a similar decision.
Yeah. Well, Marta, you raised several considerations we should ponder when using these technologies. And we see lawmakers are trying to win back some provisions for crypto companies so that they don't have to report information with these requirements as brokers. So we'll see how this develops as an ongoing story. Marta, thank you very much for joining us. That was crypto and civil liberties attorney Marta Belcher. All right, that's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock in New York. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.